Good morning or good day, wherever you are. Welcome to our global webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Friday, 19th of October 2018. Welcome to Atmer Markets. We will start, like every day, with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer or just any other information like the key information documents, the kits, just visit one of our web pages, for example, atmermarkets.com, and you will find everything about Atmer Markets there. Also the different options and offers for retail clients and professional clients. If you are in the European Union, since August 2018, there's a different offer about the leverage, margin requirements, and protection for retail and professional clients. Sometimes the picture shows more than 1,000 words. Here you see 2 prominent examples, DAX 30 or Euro dollar. The margin requirements are quite different. For example, DAX 30, 24 euro to 600 euro. It could be a quite difference. If you are a professional client, you can apply for the professional client status. Retail clients will get an unlimited protection against negative balance. Professional clients not by regulation. But some brokers and also Atmer Markets have an additional protection. We call it negative balance protection policy. Via that, you will get a protection up to 50,000 British pounds, what is around about 7,000 euro. All details, all terms, and everything else about that, check out on our webpage. Here you see also the specific link about that. This is me. My name is Jens. My English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, like today, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And doesn't matter if you're retail client or professional client, anybody gets the same spreads. DAX 30 or Euro dollar, again, our typical prominent examples, typical spread of just 0 to 8 points or pips during main trading hours without additional commission. Also here, all details on atmermarkets.com. And if you'd like to contact us, you can call us or send us an email or visit the other channels like YouTube or Facebook. Usual, all our live webinars will be recorded a couple of hours later, available in our YouTube channel, youtube.com/atmermarkets. Thanks for listening to my introduction. And now it's time for our day trader of today. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. Let's start with transmitting the screen and let's have a look at the German DAX first. Besides that DAX, we will be having a look at the Euro-US dollar today and possibly about a couple of other trades if we still have the time to, because there are a lot of stories going on, and of course our time is a limit. We don't have time to analyze every really big step out there. Things going with Italy, Saudi Arabia, and a couple of other stories which are impacting the whole stock markets and, of course, other markets as well. As we see, the DAX is already in, let's call it tanking mode. It's already tanking back to the lows, and which is a very important low if you have a look at the longer term of the year 2018 low, which is at the Xetra low at 11,459.08. So this is, let's say, a target to the downside for the bears, possibly, and a little bit around that. And if you gotta try it with the version of tipping the toe into the water and trying to find out how warm and how cold it is, you might step into a smaller trade and try to, let's say, catch a little bit of a relief move to the upside. That's possible, but as I said, I would really try it only with a small position. And if you like to be the guy who's more patient, you might be waiting unless the DAX is maybe a little bit moving to the downside, where I said around the year's low again, or a little bit above that, so around 11,460s, 11,450s. To have something like a better risk-reward ratio, as you know about that stuff too. Okay, we have a look at the longer-term chart. As you know, that DAX chart here from the last weeks, you see that descending trend line, still that descending trend line, and if you just have a little bit more room there. If you look at the RSI, nothing about something like oversold right now. we'll be deleting this indicator and just widen that picture a little bit more to the downside. We'll see some Fibonacci projections. And if you just use a horizontal line as well, just to measure where it is, where it's hovering around here, around E11, 120s already, and going to the downside to the 161.8 to get the complete picture to the downside as well. We are already in the territories around that 10, let's say 10,800. And a little bit underneath that. So that's the bigger target to the downside for all the market bears out there. What is going on? Why is the DAX tanking? Why is the DAX moving down? Well, a couple of stories around. First story, really sad to say, but it's Italy. A lot of stuff is going on with Italy right now. You look at the euro-US dollar rate hovering around 114.50s, and look around what is going on with the story with the Italian financial plans and the huge debt Italy is walking around with, and there's no solution. They need to simply save money. Need to simply stay stable and don't overdo, and that's what they are really having impact right now with the European Commission. So this fight will go on in the next couple of days and weeks to come, and will be leading to possibly more downside in the markets, because Italy, these guys in Rome, they know that Italy is too big to fail, and they try to play poker. And hopefully the cards in the end won't be bad for us all. Okay, let's say what's going on with the short-term stuff with the DAX. We'll be checking out the Market Watch again, opening a new naked chart, and doing that from the daily perspective, of course, and just have a look at the Admiral pivots, which we'll find here at the navigator, for example, implementing those ones here, and just having a look at these levels. And besides that, of course, we will be having a look at the so-called Xetra DAX levels, resistances. If you see that a board I just prepared for you guys here, the resistance 1 is 11,725, resistance 2 is at 11,860. That's from the daily perspective from the Xetra DAX. If you remember the last rally, the last rally high, so from this short-lived rally, the last days was around 11,847 rate, very close to that resistance 2 level here. If you see supports, that is the support the DAX already scratched this morning, so 11,520s, and this support, this first support here. Obviously holds a little bit, and the next one is at the 11,451. And if you remember, I told you about the year's low 2018 which is at 11,459.08. So this is a little bit underneath that year's low. EMAs, so-called exponential moving averages, important is the 100 and 200. So this 100 line is at 12 to 97, and the EMA 200 at 12,414. All these kind of numbers are just taken from 1030 CTs, and they are not very old, let's say that that way. Okay, if you go back to that chart as I showed you, this one, you will be squeezing this a little bit more. Let's say, wait for a second for the weekly picture, of course. And you got to see that green line coming up here. That's the moving average 200, which is now scratched the second time. Of course, you may be scratching your head. What is this guy talking about moving averages? This is nothing like a big mega support, but in fact, it touched it, and it is hovering around right now. And let's say it stays around that moving average 200. So that could be a possible way to find a new entry around that 11,470s. And as you remember, a couple of minutes ago, I told you about 11,450s, 11,460s to maybe to try first step for a rebound move to the upside, which is leading us into the blue box. Going back to the dailies, the blue box, which is something like the next wave up. next wave up will be in direction to this blue box, possibly around 12,130s to that 61.8 level at 12,275. Why is it that way? Well, a market is not always going to the downside. We are moving in so-called waves. And it's nothing new when I tell you something about these stories from the ZIG to the ZAG. If you look at charts, it's always the way it works. You get a little bit of waves and a little bit of stories going around the world. And if there is a little bit of a relief talk, and it looks like right now with Brexit, and there is a little bit of more solution or a little bit of more neutral talks between the European Commission and Italy, markets will be trying to buy into that rumors, and they will be going up again in the end of October into the next month ahead. So that is the scenario, which is, of course, nothing like Merlin's glass ball, as you know, but this is just a scenario which I would say is quite acceptable. Okay. So let's go to one thing from the last week. I told you guys something about the Kiwi long, the New Zealand dollar versus the US dollar. This position is already taken out. If you are able to look at the charts or the YouTube channel from last week, you will see the recorded webinar that I told you to go long that stuff, and of course it's your 100% thing to say, oh, I'm exiting right now, or I'm leaving the position and let it just simply run to the upside. So just want to say that's the position which went up. Next story, natural gas, very rare, not on every day's calendar for everybody out there. Quite interesting in the last weeks, because there was a little bit of a jump up from 270s to 320s, and the next possibility maybe to step in is if you have something have a relief, or let's say a little bit walk out to the downside, we'll be seeing that high here at 303. So let's say it's 304. We'll be taking this horizontal line here just to mark that level, which is a possible re-entry zone. Of course, you could take other highs here as well, but in the longer term, I would say that is very, very nice to look at that 304 level, or very close to that $3 handle. On top of that, Fibonacci's from the last downside to the last upside. And there is a little bit of a squeeze between that 38.2 or 50% level. So a little bit in the middle of it. So possibly the $3 level is not a bad level to re-enter if you like to be part of that guys going long in natural gas. Where there's a possible target to the upside, of course. We'll be deleting this longer term Fibonacci here, and we'll be going to a 4-hour chart, or let's say to a 1-hour chart, to be more able to show you that the right picture here, and inserting Fibonacci's here as well from the last upside to this last downside here, and of course taking the projections to the upside here. And if you squeeze it more, you gotta get a lot of 1-hour projections, even way up to the upside. You all know these numbers: 161.8, 261.8, and 423.6. Of course, this is a 1-hour chart. If you do that at the 1 day chart or at the daily chart, we will do that immediately. You will be seeing that we will be getting that stuff almost the same. Look at this, both levels here, and then you see the same stuff. Of course, important to say is that the next let's say magic number to the upside is the $4 marker. And it's nothing like a marker that I'm talking about, which would be the next goal. A lot of market analysts, a lot of commodity analysts tell us that the natural gas contracts will be scratching the $4 marker, not because of charts, because of some kind of fundamentals. And on top of that, if you look at the futures contracts into the next month, this one of the most important natural gas contracts, like the Henry Hub future, is traded at the biggest stock market, the biggest exchange of the world, the CME, so the Chicago Mercantile Exchange, and you got to see that at their websites. If you look at the future contracts, you will be seeing that the next month to come in direction 2019 are scratching markers like 405, 407, and around $4 markers. So it's not too let's say too crazy to speak about $4 handles for natural gas. So that's one side of the story. I just marked where you possibly could enter a first long. Of course, you could tell yourself it is a nice entry at this level here again, but somewhere between the 305 and the 310, you got to step in and try it for a first move up and to direction 350s and $4. Okay, that's enough for natural gas. We spoke about no, we're just going into details from euros dollar, of course. Important analysis from 2018 from years high and years low. You see the years high here at 125.56, very close to that, and you see the years low at 113.01. These two levels combined with the Fibonacci analysis gives you the 23.6, which is around 115.97. And of course, the bears might be targeting the last low here again. Just marking that with a typical blue trading box here. And this is the way where possibly a lot of bears are targeting the level at 113 to get back to that level. And the first level for relief will be the 23.6, which is, like I said here, 115.97. So this might be a target for a relief movement. All I gotta say is this relief movement is only able to be happening when possibly first Brexit is a little bit more constructive. There are not only a couple of little proposals from Mrs. May out there, and there maybe is not only a bad talk from Mr. Tusk or whatever. No, there's something really 100% with facts. That would be something like moving this market, the euros dollar, more to the upside. And of course, Italy. If you look at Italy's budget crisis and the facts, and look at the Italian bonds, so-called BTPs. Yeah, so the Italian 10-year bonds, they are scratching at 376. Look at long-term charts. If you check out the long-term charts of Italian bonds, you will be seeing that this level is not being scratched in direction 2014. In 2014, we even scratched 4%, and if you go back to financial crisis levels, 10-year Italian bonds went up to above 7%. So let's pray that won't happen, because when it happens, the European Union and the Eurozone has a very, very big problem. And things like Draghi, which he already said in direction to Rome, don't expect ECB will be rescuing you guys if your budget talks fail. This is something which is really, very dangerous. So contagion risk for other markets is very, very high, even for German banks, even for German markets, and all the other Eurozone markets as well. Because when Eurozone is about to, let's say, fall apart, to have a very negative picture, we will be running into more than just problems. Okay, let's pray that won't happen. Look to the possible downsides here as well. Besides that, we will be seeing levels in direction of the 110 level, which is a very round level here, not something like a magic level. 110, let's see what it is, 110.03, I just marked that. Deleting this long-term Fibonacci analysis, going to a little bit more details to just get the other levels here as well. So first inserting another Fibonacci from the downside to the upside here. and marking the next targets to the downside here for you guys as well. And oops, you can see that 110 is not something like from Merlin's glass balls. It's nothing like an invention by myself. It's just Fibonacci 161.8. So you just move that horizontal line correctly on that 161.8 level. You are very, very close to that 110 handle. So that is the bigger target to the downside for all the Euro bears. Looking at the bigger picture is not only chart technical stuff. If you look at the current moves, for example, last month, you will be seeing that this kind of numbers are delivered to you guys free every month. The so-called TIC data. So TIC data. What does TIC first of all mean? TIC is so-called the Treasury International Capital. And this kind of data is official US data, and yes, let's say it measures the flow of portfolio capital, so into and outside of the US. So mostly you see those flows in regarding treasuries. And if you look at treasuries and how much is moved from the outside to the US, you'll be seeing that last month inflow was 131.8 billion. So that's one of the biggest inflows into the US since 2014, analysts say. If you check statistics and data, you will find out that's true. And if you see that in a picture for 2017 and the next into the next month to come, it makes sense, because the more the Fed is hiking, the more the interest rates are going up in the US, the more capital is likely to go back to the US or to be attracted to the US because of the high interest rates. That's very, very important to say. Money is going to into the direction of higher and safer interest rates, and that is very important regarding the fact that stock markets deliver something like 1.7 to 2.7% of interest in forms of dividends, for example. And if you get 2.5% in direction 3.2% for treasuries, you just don't have to calculate too long. You're maybe attracted by treasuries, and you simply invest your money into treasuries and just skip the stock markets. So that kind of a game will be happening the next weeks, months, and years to come. Okay, I need to check out what time is it, Jens? Do we still have some minutes? Hello?
Yeah, 1 or 2 minutes we have more, but our goal is quick and smart, but for the daily, so we already have 22 minutes, but 1 or 2 minutes more we have. But from my side, I already say thank you and goodbye. The last 1 or 2 minutes, the final words from our day trader Dirk. Usually I say tomorrow is another day, but tomorrow we have weekend, so already today to the second. Have a nice weekend, and the next live webinar, Real Time Daily Trading, is on Monday to the same time with Jay Medro. So thanks a lot. If you'd like to see and watch it again, a couple of hours later will be in our YouTube channel, youtube.com/AdmiralMarketsFX. And now the last 1 or 2 minutes from Dirk.
Yeah, thanks, Jens. Again, and the only thing I wanted to show you guys is the current gold chart. We spoke about gold and about this possible upside a long time ago, and a couple of weeks, and every week possibly. And I told you about this 61.8 level, which is around that 1,180. And as you can see that in the chart, you see the daily chart here. A couple of times that kind of 61.8 level got scratched, tested. And the big moves just came from all these, let's say talks around Italy and Saudi Arabia. One thing I totally forget why markets were dropping the last 2 days, or let's say not 2 days. Yesterday is the fact about Saudi Arabia. I can't talk about this too long because it takes too long, but all I can say is inform yourself about the story which is ongoing with this guy, Khashoggi, who got possibly murdered, killed, however, or teared apart in the embassy in Istanbul, in the Saudi embassy in Istanbul. We'll be seeing what will be happening the next weeks and months to come. I would say nothing big will happen because the interest in doing business with Saudi Arabia and the other way around is too big, too important. I would say there won't be happening anything. The US is a very 100% good advice not to start sanctions against Saudi Arabia, because that simply would kill their market. The Saudis possibly would restrict oil exports, and that would lead the US to pay energy prices they won't be likely to pay. And this will be just killing the GDP numbers in the next quarters if that would happen. So that's the case. I think that there is a lot of diplomatic nonsense you will be reading in the next weeks, but in the end, nothing big will be happening because the money is still ruling the world, and the money is important, and that's what they are trying to get out of the media, I guess. Just a feeling. Okay, you guys, hopefully a sunny weekend. When I look outside of the window, there's the sun already shining. Have a good trading day, a couple of nice trade setups, and just watch out for the bumpy roads. They are not gone. And if you look at the current market environment, try to really not to overdo with position sizes, and try to be protected, and always think about your stop loss management, and not to be dragged down into negative territories or negative balances in the next days to come. Okay, thank you very much, and see you guys next Friday, 11 CT. Bye bye.